April 2025. Welcome back. Today we're jumping straight into the currents shaping the investment landscape. We've got a fresh PAI morning briefing here from Pantheon AI, and, well, it's highlighting some pretty significant market moves and trends you should probably know about.
That's right. Yeah, this morning's briefing gives us a really crucial snapshot. The market's navigating some complex stuff right now. Understanding these dynamics is, well, it's key.
Okay, so let's unpack this. Looking at the major U.S. indexes, the S&P 500 is around 572.93. That's down about 2.25%. The Dow Jones, similar story, down roughly 2.4% to 3,991.28.88. Now, the Nasdaq, it's at approximately 157.92.46, so down about 1.6%.
Right.
But here's the kicker for the Nasdaq. It's down a considerable 21.2% from its all-time high.
Yeah.
That's a big correction.
Yeah, that 21.2% drop, that's a key indicator. It suggests more than just, a minor blip. It signals a broader reassessment, maybe, of how investors are valuing growth stocks, especially tech.
Right, after that huge run-up.
Exactly.
And it's not just big tech. The Russell 2000 tracking smaller companies, that's down even more, around 3.13% at 107.54. This wider decline, it suggests a more pervasive caution, maybe.
Exactly. The fact that smaller cap stocks, which are often more sensitive to the economy, are also down significantly, it reinforces that this isn't isolated. It points to potentially broader concerns about the outlook, risk appetite.
Yep. Now, let's take a quick peek at crypto. Bitcoin is trading around $82,456.05, down just 0.8%. Modest. Ethereum's at about $1,787.86, down 1.6%. A bit less dramatic than sometimes, but still, some downward pressure.
Sure, and these slight dips, they remind us that even in digital assets, which sometimes dance to their own tune, broader market sentiment still plays a role.
Right.
And like PantheonAI notes, that volatility, it's part of the thrill, but also the challenge, right?
Absolutely. So we have the numbers, but as the PAI morning briefing from Pantheon AI stresses, our mission today is really to go beyond these figures, to understand the major trends making investors pause, consider their next moves.
Precisely. The numbers give the initial picture, but the real value. It's understanding the why. What's driving these moves, and what could it mean for investment strategies going forward?
One of the first things Pantheon AI highlights is that big Nasdaq correction, that 21.2% drop. It points out, even the hottest sectors can see major pullbacks. What do you think is behind that, beyond just taking profits?
Well, several things, probably.
Yeah.
After such a strong run in tech, investors might be rethinking future growth expectations. Plus, there's increased regulatory scrutiny, and the whole macro environment. Concerns about trade. That definitely weighs on valuations. Pantheon AI mentioned how the stronger jobs report initially gave some optimism, right? But then, bam, trade tension worries took over. It shows how quickly sentiment can shift.
Speaking of trade tensions, it really feels like we're in this constant escalation cycle. China's now hit back at the latest U.S. tariffs with matching ones, up 34%. That's direct retaliation.
Yeah, and what's striking, as the Pantheon AI briefing points out, is the symmetry. Both sides raising tariffs by the same percentage. It feels like a hardening of positions. Could mean a longer period of friction. And these kinds of disputes, they mess with supply chains, raise costs, which eventually hits consumers. That uncertainty is a big factor weighing on the market.
Right. And the briefing from Pantheon AI poses that key question for people listening. Is this the start of a long trade war, or just a, temporary negotiation tactic? Hard to say, but that uncertainty itself injects volatility.
Exactly. Markets hate uncertainty, the potential for escalating barriers. It raises big questions about company profits, global competition. But, Pantheon AI also points out this volatility can create opportunities for long-term investors who can stomach the short-term swings.
Okay, let's shift gears slightly. Lots of talk about the Fed potentially cutting interest rates. Some are even predicting, 4 cuts this year?
Yeah, the chatter's loud.
Data from CME Group seems to show increasing odds of a lower federal funds rate. Can you quickly explain what that rate is and why cuts are being discussed?
Sure. The federal funds rate is basically the target rate banks charge each other for overnight loans. Lowering it makes borrowing cheaper for businesses, for consumers. It can stimulate the economy. So the anticipation of cuts, as Pantheon AI notes, often signals worries about growth slowing down. The Fed might use lower rates to prop things up.
And PantheonAI frames these potential cuts as a counterbalance to a slowing economy, but it also raises a really critical point for listeners. If this extra liquidity from lower rates causes a rebound, could that just reignite inflation later? Sounds like a tricky balancing act.
That is the core challenge. Lowering rates boosts things short term, but it also increases the money supply, if not managed carefully. Yeah, inflation could come roaring back. It's a classic trade-off. PantheonAI's analogy, calling the cuts more like a financial band-aid than a long-term cure, that really captures the dilemma, I think.
And as PantheonAI mentions, some critics worry that really aggressive cuts could distort market signals, maybe encourage too much risky investing. Echoes of past cycles, right?
That's a valid concern, absolutely. Artificially low rates can lead to asset bubbles, misallocated capital, where money flows based on cheap borrowing, not solid fundamentals. It really underscores why investors need to stay disciplined. Don't get swept up in rallies potentially fueled just by easy money. Like PantheonAI suggests, sometimes the cure brings its own problems.
Okay, moving to specific sectors. PantheonAI's briefing highlights toy prices could jump significantly, maybe as high as 50%. Because of these new tariffs on goods from China and Vietnam, that seems like a really direct hit on household budgets.
It is, yeah, a very tangible example of how these big macro issues trickle down. Toys might seem specific, but the industry relies heavily on those global supply chains. Tariffs raise costs for manufacturers.
And they pass it on.
Very likely, yeah. It just adds to overall inflation pressure.
And in the U.S. Treasury market, yields on 10-year notes are falling below 4%. PantheonAI suggests this means investors are running for safety, basically. Government bonds feel safer amid worries the trade war could trigger a recession. That drop in yields feels like a strong signal.
Absolutely. When investors get nervous, they often move to safer assets like treasuries. Demand goes up, yields go down. It's often seen as a sign investors are less optimistic about future growth. PantheonAI's analogy of looking for the exit when the lights flicker. That's a pretty good description of this flight to safety.
All right, turning to the corporate world. PantheonAI notes Tabi is acquiring Mondi, that's a travel marketplace and AI tech company. Mondi was undergoing Chapter 11 restructuring. Interesting move in travel tech.
It is. This acquisition shows how periods of uncertainty can also, create opportunities for consolidation. Mondi's focus on AI and travel makes it attractive. Tabi's move might signal a broader trend. Companies looking for undervalued assets with future potential, even when the economy's shaky.
And PantheonAI also points to the ongoing TikTok situation. The deadline for bids is coming up. Lots of speculation about who might jump in. It's not just the user base, right? It's about potentially reshaping digital advertising.
Oh, TikTok's influence is huge. The strong interest from potential buyers really underlines its strategic value. User engagement, disrupting digital ads. It raises big questions about the future of social media, how companies fight for our attention online.
Interesting. In medtech, PantheonAI mentions a regulatory filing involving Octopus Investments and Advanced Medical Solutions Group. Sounds technical, but it seems to offer a peek into how finance sees long-term trends in healthcare, like aging populations, biotech advances.
Exactly. These filings show where institutional money is placing bets in healthcare. That intersection of finance and medtech is significant, driven by demographics, innovation in patient care, suggests potential long-term growth there.
It's interesting, too, that PantheonAI touches on why so few sports teams actually go public, despite huge valuations. They seem to prefer staying private, avoiding public scrutiny, quarterly earnings pressure.
That's a fascinating point, yeah. The dynamics are unique. Owning a team, it's often about more than just money. Control, that emotional connection with fans, the community, a long-term vision that can clash with the short-term demands and transparency of being public. Passion over pure profit sometimes.
Right. And PantheonAI notes Voisi Brands in Helsinki acquired the Finnish design brand Magiso, presented as a strategic move emphasizing design and function in home solutions.
Yeah, that acquisition highlights the importance of brand differentiation, aesthetics, and usability. Even in established markets, companies are always looking to improve products, appeal to changing consumer tastes.
PantheonAI also highlights Wilson Art buying Virginia Tile's woodworking product distribution business. Points to vertical integration companies trying to streamline, control more of their supply chain for stability.
Precisely. Vertical integration, controlling more production and distribution stages, can boost efficiency, cut costs, make the supply chain more resilient. It's a strategic move to strengthen competitiveness, especially when industries are consolidating.
So putting this all together, PantheonAI emphasizes the sector-wide implications. Tech needs to adapt to market pressure, trade tensions, Energy is watching geopolitics. Finance is focused on those potential rate cuts.
These interconnected forces really underscore the complexity right now. What happens in one sector ripples through others, affecting risks and opportunities. You have to consider those broader implications.
And the global impact is obvious, isn't it? US-China trade disputes affect everyone. Supply chains, market sentiment, Europe, Asia, they're all watching closely.
Totally. The global economy is so intertwined. These tensions create uncertainty worldwide. Highlights the importance of having a well-diversified portfolio, considering international exposure.
Looking ahead, Pantheon AI's briefing notes a sort of cautious optimism among analysts generally. Despite the current caution from declines and trade fears, there's this underlying belief that potential Fed action could help stabilize things, like the market's trying to find a new footing.
Yeah, the idea of a market reset is useful. Corrections, while uncomfortable short-term, can clear out excesses, create a more sustainable base for growth, offers chances to buy quality assets at better prices, maybe. The potential Fed intervention adds another layer to that outlook.
The big question everyone's asking, of course, is, are these corrections just temporary or a more fundamental shift? Some experienced investors are drawing parallels to past cycles. Could we see a big rebound after this cautious phase?
Well, looking at history helps, gives context. But it's crucial to remember every market environment is unique. Past cycles offer guidance, sure, but you have to consider today's specific factors, the nature of these trade tensions, tech disruption, all that stuff.
And there's a nice touch of humor in the Pantheon AI briefing, comparing the market to an unpredictable barbecue recipe. Sometimes it's amazing, other times you question everything. A good reminder about the unexpected in finance.
Yeah, that touch of levity helps keep perspective. Investing is serious, but acknowledging the uncertainty with some humor, it helps manage expectations, reduces stress.
So, to recap the key insights from this PAI morning briefing by Pantheon AI. We've seen market dips, but remember, volatility is normal. Trade tensions, potential rate cuts, they create challenges and opportunities. Think corporate acquisitions, tech innovation, financial sector moves. And the interconnected global market means diversification is key for you.
Those are crucial takeaways. Navigating this market needs balance. Acknowledge the risks, but stay alert for opportunities that pop up in dynamic environments like this.
And as always, Pantheon AI aims to be your information copilot, helping break down these complex dynamics into usable insights. If you have more questions or want to dig deeper, remember, Pantheon AI is there to assist.
Yeah, leveraging technology to process all this complex info is becoming vital. Pantheon AI's role in providing clarity, actionable insights, it can be a really valuable tool for making informed decisions.
In closing, the Pantheon AI briefing uses that fun analogy of the market like an unpredictable sitcom plot, full of surprises. And that constant evolution is part of what makes it so captivating, right?
Absolutely. Its unpredictability keeps things interesting, and it underlines the need for continuous learning, adapting your strategies.
So thanks for joining this deep dive into the Pantheon AI morning briefing. Keep asking questions, stay informed, and definitely consider using tech like Pantheon AI as a partner. Remember, that AI copilot is ready to help.
Continuous learning, active engagement, essential for successful investing. These insights from Pantheon AI are a great starting point for that ongoing journey.
And on that note, here's something to think about. Given the sheer amount of data AI like Pantheon AI can analyze, what completely unexpected correlations or leading indicators might emerge down the road? Things that could give us a totally new angle on market shifts. Definitely food for thought as you navigate your financial future.